Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. There have been in recent times here some similarities between this contract and the Chicago contract. There had been a bullish halfway hesitation in July, though a singular one during a pullback up, with an initial target in the 713 area and a secondary target in the 742 area. Both had been achieved, unlike the ones in Chicago. We also had the same monthly key reversal up in July, and this is part of the key. A similar upper tine, currently 772, of the late March to early July shallow bullish shift pitchfork. This upper tine had capped the market in August, much as the version was seen in Chicago, and caused the breakout lower, out from a recent July-based bullish rising wedge pattern for target below in the 697 area. This was for the wedge pattern was especially interesting because that's where we also have the 50% absolute Fibonacci line, and a little below the 50% Fibonacci line of the big old 2011-2019 move at 692. Well, prices overshot these and went down as far as breaching the odd combination of the rising short-medium moving average, currently 729, the lower tine of the March to July bullish Andrews pitchfork, currently 743, and the middle tine of the larger original bullish shift pitchfork, currently 685. If that wasn't enough, just below was at the time the slowly rising medium moving average, currently 690. What that meant was the market was halted and turned back up 5 weeks ago. In the process of moving up, the market created a small reverse head and shoulders pattern over the last late August, late September period. The market broke up through the neckline 3 weeks ago. This move up led to me placing initial target X not too far overhead in the 776 area and a secondary target X1 in the 793 area for this reverse head and shoulders pattern. At the start of October, it looked like even target X would be hard to get, as the difference between Kansas City and Chicago contracts were now becoming evident once more. You see, the market had moved up enough that it was testing the very shallow upper tine, currently 772, mentioned right at the beginning. However, the tine held again, and prices over last week and the week before dropped down to the neckline of the reverse head and shoulders pattern, the original one I spoke about, where they held, though not without breaching the neckline. We even saw a breach last week of the lower tine, currently 744, the big old bullish Andrews pitchfork with its seemingly departing partner, the rising short-medium moving average. That's currently at 729. But this time, a test of this tine generated a move back up in a small V-bottom, formed over the last 3 weeks. This move up was not without incident, the most recent of which was yesterday's immediate countering key reversal down and bearish double. However, today prices opened high and looked very much like they were forming a strong bullish white soldier today, which has breached the upper tine again, but importantly it has reached target X, the initial target for the reverse head and shoulders pattern in the 776 area. We admittedly dipped lower since then, but this is an important action as the market is getting heavily squished and all the forces reach an apex in mid-November. If you've not been able to follow that, what I've been saying there, what I've been getting at, that's fine. Just replay it a few times and I'm sure you can see that what I say has made sense. Anyway, it all now depends on consolidating that move up to target X and then looking up at target X1. Just be aware, all this is in the shadow of July's monthly key reversal up. Minneapolis wheat. Once more I feel obliged to say here again, I continue to admire this contract, really admire this contract, and with some unabated passion, as it has been and still is a series of brilliant pieces of technical action. I've repeated the same mantra now for months, literally months. This despite there being a number of, let's be honest, quite a number of huge differences here in this contract compared to Chicago and the Kansas City contracts. For starters, and perhaps supremely important, December 2020 to early April, bullish Andrews pitchfork, which has run this market higher so successfully, was and is still valid here, even though you would have to allow for some of the aberrations we've seen over the summertime. The market subsequently curled lower in August and started to accelerate the drop in September, down through the rising short-medium moving average, currently at 913, and below the middle tine of the original bullish Andrews pitchfork, currently 933. However, both these two supports eroded the bearish incentive and re-established the original bullish incentive, such that today, yet another Friday, we have yet again the highest high in recent times. Hence I would keep a close eye on that combination of rising middle tine and flatlining to rising short medium moving average below. Any serious deviation from there could be an indicator of the next move, obviously assuming it is not a false break. Meanwhile above, we have started punching up through some serious resistances, not just the November 2012 high at 977 or even the September 2012 high at 986. No, there is something more. We have the important 50% absolute Fibonacci line above us at 974. We've closed it once, or once over it 2 days ago. Barely though, barely that is. Then yesterday we had an immediate countering bearish army which set prices back a bit. And now today we are punching higher still, up through the September high. However, it is all now depending if we can close up over the 50% absolute Fibonacci line, and consistently. These are the things to watch. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.